Welcome to the Lend Academy podcast, episode number 200. Yes, we have hit the double century mark. This is your host, Peter Renton, founder of Lend Academy and co-founder of the Lend It Fintech Conference. Today's show is sponsored by Lend It Fintech Europe 2019, Europe's leading event for innovation in financial services. It's coming up on the 26th and 27th of September in London at the Business Design Centre. We've recently opened registration as well as speaker applications. You can find out more by going to lendit.com/Europe. Today on the show, I am delighted to welcome Luvleen Sidhu. She is the co-founder and president of BankMobile, and she's also the reigning Lend It Fintech Woman of the Year winner. And I wanted to get her on the show to talk about some of the interesting work that they're doing at BankMobile. She does have it's quite a fascinating company. We talk about their consumer offerings and who they're targeted to, and we talk about their banking as a service offering and their first big client, T-Mobile, which is super interesting. We delve into that in some depth. We also talk about the whole landscape of digital banking in this country, and we talk about their partnership with Upstart, which has them offering consumer loans as well. It was a fascinating interview. I hope you enjoy the show. Welcome to the podcast, Luvleen.
Thank you. Really happy to be here.
Okay, so I like to get these things started by giving the listeners a little bit of background about yourself and actually what you did before BankMobile.
Sure. So before BankMobile, I graduated from Harvard in 2008, and I joined Lehman Brothers, and we had 6 weeks of training prior to my first day on the job. And my first day on the job ended up being September 15th, the day of the Lehman bankruptcy.
Wow.
So it was a very, very interesting start to my career. And I remember, people walking out with boxes, and there I was sort of walking in. I remember calling HR and I was like, hey, should we even come in today? And it was very eerie. And they were just like, of course, business as usual. And so, I did start my career at Lehman. My part of the business became Neuberger Berman. And I worked in the hedge fund to funds group on the investing side. And after that, I spent 1 year at our parent company, Customers Bank, which is a community bank based in Pennsylvania, and got my hands into banking. And then soon after that, left for Wharton, where I went to business school, interned between my 2 years at Booz & Company in their financial services industry vertical, where I helped a well-known financial institution launch their direct digital bank. And it was really through my time at Customers Bank, also coming from a banking family, and my role in helping sort of consult this financial institution to get into the digital banking space that really led me where I am today.
Okay, so then, while you grew up in banking, you haven't had a long career in banking. What was sort of the trigger that made you decide to start BankMobile?
Sure. Well, I think it's a combination of personal experience and then just understanding of macro trends and really what was happening. From a personal experience standpoint, so my father is a veteran banker. That's what I meant by I grew up in a banking family, and he helped build a bank called Sovereign Bank that is now bought by Santander. And I remember the first time when I entered college, I went in to open my own bank account. And it was during that experience where it took me about 15, 20 minutes to open this account. And there was definitely nothing inspiring or, positive that I remember from the experience. It was rather dull, didn't really understand what I was doing, the benefits of, working with this financial institution, or how they could really help partner with me to really help me understand financial management and where I was in the stage of life and grow with me. And so I think it was my first sort of insight into my own experience with banking that left a mark for sure. And then in addition to that, being able to work at Booz with the direct bank being launched and helping, consult another company get into that space helped me really understand the macro trends that were occurring at the time and how the macro environment was really ripe for disruption in this space. And so if you look at consumers, they are interacting with their bank on mobile devices 20 to 30 times a month, but only walking into a bank branch on average one time a year. Mm-hmm. Mm-hmm. We're also seeing, Americans, a third of them living paycheck to paycheck. Almost 50% of Americans don't have enough to pay for a $400 emergency if that ever happens. And these same Americans are being charged $34 billion a year in just overdraft fees. So there's one angle where it's like, hey, we weren't delivering banking in the channels where people wanted to consume. And two, people are looking for an affordable banking solution that's not so fee-driven since they're already in sort of a financial fragile state.
Right.
And so I think understanding consumer needs and behavior shifting, it was really this understanding that a new way of doing banking to meet those needs, it was a great opportunity for that.
Right. But, starting a bank is not a trivial exercise. It's not like starting a tech company where you can get a couple of friends to come over and hang out in your basement for a year or two and start and just away you go. Starting a bank has a pretty major barrier to entry on the regulatory side. So I'm curious, do you, where are you at now? I know you said you've been incubated inside Customers Bank. So do you have your own banking license? Are you using their license? I mean, what's the relationship between the two organizations?
Yeah. So today we are a division of Customers Bank. And Customers Bank, where I also did my school, and I already knew that they were looking at sort of expanding from just commercial banking to retail banking. And the time that I was there, we were very interested in the models like Bank Simple that had launched at that time already. And so I think the idea was already brewing within Customers Bank of how do we take advantage of this new trend, this new digital mobile first trend that is just starting. And so after I graduated from business school, Customers Bank was really looking to take action and move forward on that thesis. And so I joined the bank. And they really gave us, a couple mandates. And it was great because they sort of incubated us and kept us separate from the rest of the bank so we could really innovate and develop, the best strategy going forward. But it was, how could we create a better product than exists today? How can we make it more affordable? How can we make it easier to use with a great user experience? And can we create an income and revenue model that is at least equal to traditional banks, if not better? And lastly, assume that branches are illegal. And how would you still create this product and this distribution channel to acquire for this new mode of banking? And so it was really with those pillars in mind that we got together and really defined and started BankMobile.
Okay, so let's go and actually talk about your offerings, because you were a digital bank and there are others obviously doing the same thing, but that there's a lot of different types of products that you can offer. So why don't you just take us through your core offerings?
Sure. I think firstly, I'd like to just start with what are consumers looking for? And that maybe sort of answers some of the product questions.
Okay.
And I think what consumers are looking for, one, it's simple. Sometimes we talk about, what is the most innovative product that we can do to really change the face of banking, the way banking is consumed and experienced. And I think that's a great aspirational goal, and that we are moving towards that aspirational goal as an industry. But there are small things that are still so broken, from being able to open an account with 5-6 clicks. And so both in our BankMobile Vibe product and the T-Mobile Money product that we just launched with T-Mobile, we're able to open an account within a few clicks. And that's a great onboarding account opening process and what consumers are looking for, instead of that 15 to 20 minute one that I described to you back in college. Mm-hmm. Two, people are looking to be able to earn money on their money. And so with the big banks on average spending, no more than 8 basis points on interest on checking accounts, we are launching soon for our BankMobile Vibe products 3% on balances up to $1,000. And through our partnership with T-Mobile, we're offering 4% on balances up to 3,000 and 1% thereafter. So it's really about creating a model where people are actually earning money on their money, which is something that the big banks have really ignored in doing. I think another thing that consumers are looking for is not to be feed to death. And I had mentioned the $34 billion in just overdraft fees. We've found a way to really create a low-cost banking product. And, through our partnership with T-Mobile, for example, there's absolutely no fees on the account. And we even allow T-Mobile wireless customers that have T-Mobile money to overdraft up to $50 per calendar month, as long as they pay that back within the calendar month. And so it's really about giving people the opportunity to bank without fees and not penalizing them, and really giving them the opportunity to access money if they need it in a short time frame. And then lastly, it's really about broader access to your money. And so, this model that a lot of the big banks have, where they own their ATMs, that sounds pretty old school to me. Moving towards more of the Uber model, the Airbnb model, where it's not about ownership, but really providing access to replace ownership is what we're doing with ATM access. So instead of having to own all these ATMs, we offer our customers access to a whole network of ATMs, 55,000, which is, 3 times more than, Bank of America's ATM network. So it's really about providing access to people easily for people to access their money.
Right.
So those are some of the pain points that we're solving for. And then it's also about growing with the customer and the needs that they have as they move from, one life stage to the other. So we have a big business in sort of banking students. And when students graduate, a lot of them are looking to build credit and to be able to access credit. And so on top of our checking and savings accounts, which we offer to them as students, we also have built out personal loans, credit cards, and are offering student refinance in the next 2 months. We're rolling that product out, and we'll continue to sort of roll out more credit products that help our customers build credit and really sort of move on their goals, by helping them build a strong financial foundation.
Yep. Okay. So then is your target market, your name is BankMobile. I presume you're targeting a younger demographic. As you said, you've got the students, particular things. But so who exactly is your target market?
I think when we first started, we wanted to go after those who were suffering the most from the banking system. Those who I described that really were looking for an affordable alternative. And usually those that, had the most limited access to financial services were being hurt the most with the fees, et cetera. And so when we first started with the direct-to-consumer strategy, we definitely appealed to that demographic. I think that continues to be a portion of our demographic, but then we expanded into students. And these are, low to middle income sort of Americans that are either going to 2-year community colleges or 4-year traditional schools, starting out their career, lower balances, don't know much about financial and money management. And so that has become a sweet spot for us to really help you start your financial services journey with us and then grow with us through the different products and services that we offer through your life cycle. With T-Mobile Money, it's really anybody that's looking for a better banking experience. And so the beauty about banking is that anyone can be a customer and everyone needs a bank account. And so even though we focus on niches that really need a better experience, we are definitely expanding beyond that through the different channels and distribution models that we enter into and really view that anybody can be a customer of BankMobile.
Right. And we'll talk about the T-Mobile thing in a bit, but I want to just dig in a little bit here because I'm on your website, and you actually, when you go to bankmobile.com, you can't open an account from that page. It's you've got sort of this sub brand, I guess, BankMobile Vibe and BankMobile Vibe Up. So tell us a little bit about what the thinking is there. I click on BankMobile Vibe Up and I go to a different website where I can open an account or I can join a wait list, it looks like there. So just tell us a little bit about the branding there.
Sure. So, BankMobile had historically started as a direct-to-consumer strategy, and we have pivoted since then to banking as a service, where we really partner with institutions, with companies, et cetera, that have a captive audience and feel that through our products, they can serve and solve for even more pain points of their customer base and create, in turn, more engagement, more loyalty with their customers. And so when you see BankMobile Vibe, that is our student account. And we basically serve 800 campuses across the country and help solve a pain point for them, which is sending payments between the school and the students. And in return, these students get to choose, do they want these payments from the school through ACH into an existing account or opening a BankMobile account? And through these distribution partners, in essence, these 800 campuses, 1 in every 3 college students sees our brand and has the option to open an account with us. So that's maybe an indirect way of saying it's actually a closed loop account, BankMobile Vibe, where if you go to one of those 800 campuses that we have partnerships with, you are able to open a BankMobile Vibe account, but it's not an open market direct consumer account at this time. And then same with T-Mobile Money, we are the support and the bank behind it, but you can be a non-T-Mobile customer and have different perks, or you can be a T-Mobile customer and have enhanced perks, and that can be opened through the iOS stores or visiting a T-Mobile sort of retail outlet.
Right. But it sounds is the plan with the Vibe Up product is this really just focused on the similar demographic with the students? I'm just trying to get a handle on, because it sounds like there's a wait list for that product. Are you still going to have a direct-to-consumer product that's not T-Mobile that anyone can open?
Yeah, so it's definitely something that we're pursuing and open to. So you're absolutely right. BankMobile Vibe Up is the pursuit at doing that. Although that account, even though it'll be an open market account, will be much more geared to the student demographic still. Right. And schools outside of those 800 campuses that we currently have relationships with. So it sort of broadens our breadth and depth of penetrating the student market outside of, market share that we already have with just a slightly different product that's open market.
Right.
But in terms of a broad-based direct-to-consumer play, that's something that I think is very difficult, and that's why we've pivoted to a B2B2C model, which really helps us with high-volume customer acquisition at very low cost. But we're always working at figuring out and innovating and seeing what business model could help crack the code for a very successful, profitable, high-growth direct-to-consumer strategy. And that's something that we would always be open to re-engaging with and implementing at the right time.
Right. But so your direct-to-consumer strategy right now is the student population. That's the focus. It sounds like. And is that where?
Yep.
And so I went back and listened to your interview with my colleague Todd Anderson at Lendit, and one thing that caught my attention in that interview, many things did, but there's one particular piece you said that you're acquiring customers at $10 a pop for customer acquisition cost. Is that just from the network effect of the student population? How are you able to have such ridiculously low customer acquisition costs?
Yeah, exactly. So it's a different model. So you could think of sort of traditional banks partnering with colleges and universities by potentially paying millions to really be the sponsor on campus, to have the ATMs on campus, to have a branch, on campus. And our model is different, where it's like we're in the business of solving pain points. In this situation, what is the pain point that colleges and universities are dealing with? Mm-hmm. And there is a lot of overhead, compliance headaches, et cetera, with schools having to deal with sending payments to students, especially in the form of financial aid refunds, or if someone drops a credit on campus and is owed money, or if they're working on campus and need to be paid, et cetera. And so we help ease that burden. And the schools pay us a subscription fee for our service in easing that burden and helping take care of that for them from a technology standpoint, as well as from a compliance standpoint. And in return, it really gives us access to the student demographic that is getting payments from the school. And again, it's a very neutral process where students have an equal opportunity of using an existing bank or getting a paper check or opening a BankMobile account. So in essence, our customer acquisition cost is $10 to almost, you could say, zero. It's somewhere in that range because the schools actually pay us and we get access to the students.
Right. Okay. That makes sense. So I want to talk about T-Mobile. That was a pretty significant news that was shared recently. And maybe we could start off with how on earth, how did this come about? Because, you're still a very young organization, and T-Mobile is a massive global telecommunications company. How did you first get together?
Sure. So there's a little bit in terms of, just want to put it out there that our relationship obviously is public at this point, but very T-Mobile specific questions, are best geared towards them. And we are sensitive to the fact that they are a public company, and
Sure.
It's important for us to sort of respect some privacy there. So they were looking at getting back into financial services. It's something that they had done before in the form of a prepaid card, which is a very different product for a very different demographic and is very differently integrated into the T-Mobile experience, meaning a prepaid card is usually just on the racks in the stores. And so it's a very different acquisition model. And so they were looking at, that model didn't work for them the way that they had hoped for. And so they were looking at, another way to get into financial services that focused more on a broad-based customer base, because they really view anyone can be a T-Mobile Money customer, and that the focus, ended up being more on checking accounts. And with our technology, with our experience in the student space, with our vision and mission being very aligned, we're both very customer-centric companies that have really set out to disrupt a broken industry, each of ours being quite broken in its own unique ways. And so I think there was a lot of chemistry from all different regards for us to launch this together.
Mm-hmm. And plus you have mobile, you both have mobile in your name. That must have helped as well. So
that's a good point.
So what is it so when someone opens up a T-Mobile Money account, through the T-Mobile Money website, what actually happens? Is the bank of record with that account? Is that BankMobile or Customers Bank, or what actually happens on the back end when someone opens an account?
Yeah, so the T-Mobile Money account is FDIC insured through BankMobile, which is a division of Customers Bank. There is a really robust sort of onboarding process that was built out to be able to onboard customers that are digitally opening an account versus branch-based model where you see someone come into, the branch. But what's interesting is in the T-Mobile model, you can go to a retail outlet and learn about the account and get a link to open the account, which is more of a hand-holding sort of process. But you can also do it on your own, iOS, Google Store, et cetera. And, the bank handles all the compliance that's related to opening an account.
Mm-hmm. It's just truly fascinating. So I'm just wondering if we're entering a world where, look at sort of Fortune 500 companies, and particularly those that are consumer-based companies. I'd be interested to get your perspective. Are we entering a world where there's going to be, one day we may be able to have a General Electric, mobile money account or a checking account? What is your sense about some of these really big brands? I'm not really talking about the tech companies here per se, but sort of the other brands that have a consumer presence. Do you think that we're going to see a lot of similar sort of things to what T-Mobile have done?
I think that it's a very strong possibility, and obviously we're believers in that model. We've seen Apple Markets most recently that started with a credit card, but they are very well positioned to expand that relationship into a banking model.
Yep.
There's been rumors for a long time now about Amazon and another bank, and then obviously there's T-Mobile, BankMobile. And I think that you have to look at what are the ingredients for success in these sorts of partnerships. And I think that if there's alignment in sort of vision and mission, the way that I described sort of T-Mobile being an uncarrier and fixing a broken industry and BankMobile being the same, that seems very authentically aligned, even to consumers perceiving this product being offered by the company. And so I think that there has to be some synergy with what that current business does, what it stands for, the way customers interact with that company, where the bank account or the financial services is just a augmentation of the relationship, and it helps better that relationship, make it easier, solve another pain point. So, I think that there's a handful of really good use cases where we might see more of this.
Okay, so then the second part of this question is, who are you focusing on for your banking as a service? What are you? Yeah, just what segment of the business world are you focused on?
Yeah, so for us, that's part of our strategy, and so something that we talk about less. But I think that there's, all the way from, you've seen us already act in telecom and higher ed, are very unique sort of spaces to play in. We've seen technology already play out with Apple and e-commerce potentially if Amazon enters the space. So those are some big bucket areas where I think that, this use case of banking as a service and partnering retail with banking could potentially make sense.
Mm-hmm. Okay, so do you see your future? I mean, there's two real offerings you got here. Offerings you have the retail bank offerings and the banking as a service. Do you see both as equally important for your future, or is really banking as a service where you're going to really place your bets?
Well, interestingly enough, even though it seems like our direct-to-consumer play is the student business, I really view both of them as banking as a service. And we just happen to be able to use our brand in the student market up front and center. But it's a very similar model where we've partnered with, institutions, higher ed institutions, and we are using sort of their distribution model and channel to be able to touch customers, to be able to acquire customers. And that's the same model that exists, in other white label partnerships that we would pursue. And so I think that the answer is B2B2C is where we see momentum and where we see high growth opportunities. But as I said before, I'm really excited about the opportunity of direct to consumer. I think the code hasn't been cracked yet where you make that model highly profitable from a challenger bank standpoint. And, if we figure out the secret sauce, that is definitely an area that I hope that we would re-enter into.
Right. Okay. So we're running out of time, but there's a couple more questions I really want to get to. Firstly is the partnership with Upstart, which is interesting because Upstart are sort of providing this lending as a service, and they're providing it to you. And I see it on your website here where you can go and take out a personal loan through, and Upstart is powering that service. So tell us a little bit about why you chose Upstart and what your goals are with that kind of offering.
Sure. So I think that I've always believed, and BankMobile has believed, that we don't need to reinvent the wheel, that there is an ecosystem of really strong, impressive fintech companies that are out there, and that when we're launching new products, new services, et cetera, that we can tap into that ecosystem and to be able to work together to achieve, our goals mutually. And I think what was appealing about Upstart is that, I like the founding team. They come from a Google background, many of them, and they are very smart. They're analytical. They've built a strong model that is more forward-looking, that uses artificial intelligence and machine learning to really create an alternative lending model. And we didn't want to start from scratch and build things from scratch to be able to create the best user experience for onboarding and application. They take our underwriting criteria into consideration and layer it in with their underwriting that has a lot of AI and unique sort of dimensions to it. And they help service the account. And so they're a great partner to really help us launch quickly when we wanted to launch our first credit product, which was personal loans.
Right. Okay. So last question then. What are you working on now? What's you're interesting over the next 12 months? What's What are some of the things that you're looking at?
Yeah, so I think that we want to continue to expand on banking as a service and finding another really right partnership for us to continue this model with. Two, it's definitely executing well on the T-Mobile partnership. We have a huge opportunity there to really, change the way that, banking is consumed and the way that banking is done with consumers in terms of really being in the consumer's favor. And I think that I want to focus on creating the most opportunity there. And I'd say third is, one thing in the back of my mind has always been with AI and these emerging technologies, we want to focus on personal financial management and sort of advice aspect. And I think that, there's been multitudes of PFMs out there. People have scratched the surface of it. There's rounding up somewhere, there's safe to spend somewhere else. There's aggregating different accounts somewhere else. And I think bringing it all together and using the technology that's out there now to simplify that experience, to make it really value additive, to make it more proactive advice rather than reactive. It's just high level sort of thinking, but that's definitely something that we want to explore further and see if we could be the innovators that actually are able to succeed in that space.
Okay, well, it sounds fascinating, and I wish you all the best. And I very much appreciate you coming on the show today, Luvleen.
Thank you so much.
Okay, see ya. I thought it was really interesting that Luvleen used this sort of banking as a service concept as a way to describe both what they're doing with T-Mobile and what they're doing with their own student sort of led offerings. And this whole concept of banking as a service is I think very interesting. It really is something that I think has a lot of legs. It could take off into many offerings. We're going to probably see something come out from some of the major tech companies very soon. We're already, as Luvleen mentioned, the Goldman and Apple combo. But what's to stop some of these other companies offering a similar product to T-Mobile? If you've got a consumer-facing product, I see it as a way to sort of maintain engagement with your brand and really increase engagement with your brand. It'll be interesting to see how it all plays out, that's for sure. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's show was sponsored by Lendit Fintech Europe 2019, Europe's leading event for innovation in financial services. It's happening September 26th and 27th at the Business Design Centre in London. Registration is now open, as well as speaker applications. Find out more by going to lendit.com/Europe.